Hello, welcome back to Public Sector Accounting class. This is Module 3, and we'll be talking about government accounting system and classifications, government accounting systems and classifications. And as such, we will briefly look into cash basis versus accrual basis of accounting. We will talk about fund accounting and its uses briefly. We will also look at budgetary accounting and controls. We will look at chart of accounts and coding system as it pertains to public sector accounting. This module actually covers the core system and structures that are used to record and manage government finances. And that is why we'll be looking at these core or key components that I've mentioned, the accounting basis, which talks about when when to record transactions rather. And also we talk about the fund accounting, which deals with how to segregate money for specific purposes where they have to be placed, and also the budgetary accounting and control, which talks about linking spending to the approved budget, just like we said in the previous module. And the chart of account, which talks about the coding system that organizes all financial data. And the essence of looking at this is to understand the tools that ensure transparency, control, and accountability. The cash basis. When we talk about the cash basis, as per the recognition, it's actually record transaction only when cash is received or paid. So if the cash has not been paid or received, then it's not going to, as against the accrual. So it records transactions only when cash is received or paid. And the focus is to be able to track cash flow. It's to be able to track the cash flow. And the the pros of this basis, the advantage of this basis is that it's actually simple, it is easy to understand, it's also good for short-term cash management. However, it has its own disadvantages, and this deals with it does not show the full picture, that is the amount owned or owed. So it does not show the full picture of how the organization actually is in terms of the money that is being owned or the money that you owe or the organization owe the debtors. And it's many governments, as per the common, many governments historically, and it aligns with the standard International Public Sector Accounting Standard Cash Basis Standard. For the accrual basis, it actually record transaction when they are earned or incurred, regardless of the cash movement. So, in as much that as there is a transaction that are earned, there is a money that is being earned or incurred, the transactions will be recorded regardless of the cash movement when it is being paid, as against the cash basis. And the focus is to show true financial position and performance of an organization. The advantage of this is that it's actually comprehensive, and it includes assets, liabilities, as against the cash basis, and better for long-term planning. And the disadvantage is that it is more complex to implement, and that's one of the issues. It is more complex to implement, and shift towards accrual basis are needed for better transparency. Shift towards accrual basis. So government is just like we will look at the adoption in the coming module. One of the modules, we look at the adoption, the implementation of the International Public Sector Accounting Standard, and there is ongoing move to shift from to accrual basis, which brings about a better transparency. Another aspect we are looking at, just like I said, is the fund accounting, and this is tracking money for specific purposes. And it is defined as a system that segregates resources into separate self-balancing funds based on their intended use. And the core principle stand with stewardship and accountability, which ensures money is used only for its legally or donor specified purposes. And it is like having multiple wallets for different groups. Just like let's bring it down, we talk about maybe one for grocery, and that can actually be general fund. I'm trying to bring our own spendings into the government on now. So one for groceries, which is actually the general fund, another for new car, which is capital project fund, another is one for paying off a loan, which is debt service fund as such. And for government accounting fund now, what are the common types of government funds? We have one, the general fund, and the general fund is the main operating fund for day-to-day government activities. And when we talk about this, we talk about salary, we talk about fund used for administrations and some other things as such. And we also have the special revenue fund, and this is for money legally restricted to a specific purpose in terms of a fuel tax used only for road maintenance. We also have the capital project fund, which deals with um, major construction or acquisition of assets. Example is building a new school or hospital and some other infrastructural developments. They are capital in nature. So that's a fund for such. And we also have the debt service fund, and this talks about the management to manage the repayment of long-term debts, whether principal and interest together. It's used to to repay such a long-term debt. There is also a trust fund, and this is for assets held by the government in a trustee capacity. An example of this is the pension fund. We also look into the budgetary accounting and control. Budgetary accounting and control, which is the third aspect we are looking at in this module. And what is it? It's actually the process of recording and monitoring transactions against the budget that has been approved or that was approved. And the main purpose is to ensure fiscal discipline and prevent overspending. The key concept of this under budgetary accounting and control is one, appropriation. And when we talk about appropriation, it is the legal spending limit approved by the legislature. We have the encumbrance, and it is the reserving part of the budget for a future payment in terms of maybe purchase order. And this is it prevents double spending. We also have the obligation as a key concept, and this is a legally binding commitment to pay. Maybe a signed contract now. It's a legally binding commitment to pay a particular amount that is being done. And we have the expenditure as a concept also, and this is the actual cash payment. Key elements of budgetary control include one, plan, and this talks about the legislature approves the budget or appropriation, and then they authorize it. After planning, it is being authorized. And this talks about funds are released to the ministries, departments, agencies via allotments or warrants. We also have another key element, which is commit, and the MDAs create encumbrances, that is, the issue purchase order, and also obligation. This talks about commitments become legal obligation, and in terms of signed contract, just like we discussed earlier. And another is the spending aspect, which is actual expenditure. The payment is being made, the actual expenditure is made. And another is monitor and report. which talks about compare actual versus the budget, which to see the variance, to provide a variance analysis of the spending. And also, which is the last one, is you correct the correction aspect, which take account if there are significant variances in it. And the last aspect of this module is the chart of accounts and coding system. When we talk about the chart of accounts, and it's actually the foundational framework for recording and classifying all financial transactions in government accounting, and it serves as an organized and systematic listing of all accounts used in the public sector financial system, and it provides a structure for budgeting, accounting, and financial reporting. And it also includes what we call the coding system that complements the chart of accounts, which is a unique language used to classify every transaction quickly and accurately. An example of such is such code is, for example, we have 101 can be for Ministry of Education. We can have 02 to be for Capital Fund. We can also have maybe 305 talking about school construction programs, and maybe 1101 it talks about expenditure on building materials. And this is actually important to be able to ensure consistency, enable easy reporting, and also it is essential for modern system like the integrated financial management information system, IFMIS. Bringing this together, how do they fit each other? The chart of accounts provides the structure and code. Fund accounting uses this structure to create separate ledgers for different purposes. And also, the budgetary accounting uses the same code to track actual spending against the budget for each fund. And all this can be done on either a cash or accrual basis with a global shift towards accrual for a fuller financial picture. And the result of this is a cohesive system that delivers control, transparency, and accountability. In conclusion, the cash versus and the accrual basis is about timing, and accrual gives a more complex financial picture when we compare it to a cash basis. The fund accounting is essential for ensuring money is spent as intended by the law or donors. Budgetary accounting and control is the mechanism that enforces the budget and prevents overspending. And looking at the chart of account, it's actually the standardized framework that makes all the other system possible. And together, this system forms the technical foundation for credible and reliable public financial management. Thank you for listening.